I will tell you that on any common sense definition, if the average American is below where he was before, or his family, in terms of real income, GDP, we're still in a recession.
All right, that, of course, was the great Warren Buffett. He's pouring cold water on recovery, reminding investors it still feels like a recession. But he's actually sort of bullish on stocks. So is he right? What's it mean? And is the Fed, by the way, confusing the whole bloody market? Let's talk to Dan Greenhouse, chief economist, chief strategist at Militayback. Lee Munson, chief investment officer, portfolio asset management. James Glassman, director, George W. Bush Institute and Kiplinger's financial columnist. Hey, Jim Glassman, is Warren Buffett right? Are we still in a recession?
No, the recession ended a year ago.
Why does he say that?
I'll take what the guys up
say that stuff?
I'm not really sure. And I love Warren Buffett, but I think when he ventures into the economic, eco-political world, we don't necessarily have to take everything he says as being the God's honest truth.
Dan Greenhouse, what's your take on this story? Stocks are slipping. The Fed said they're going to reflate, inflate the money supply, destroy the dollar. Nobody seems to like this. Easy money. Is Wall Street grown tired of easy money?
Well, I think there's a lot of questions there. The first thing I would point out with respect to the September swoon is it's very important to remember that the second half of September is traditionally much weaker than the first half of September. So if we were to correct some of the appreciation we've seen in the first half of the month, that would be totally in line. But with respect to the Fed and easy money, I think there's a real divided argument on Wall Street right now, as you know as well as anybody. There's a lot of people that think the Fed should be adding even more liquidity. If you read their last FOMC statement and you just looked at the first or second paragraph, you'd think this was a Fed that was ready to cut rates and ease further.
Yeah, I know. And they're going to destroy the dollar in the process, Lee Munson. And while you're answering that, we're going to put some charts up. Commodity markets are telling the Fed there is inflation and we're not deflating. You got your foodstuffs are rising substantially. Your raw materials are rising substantially. Cotton is rising substantially. And Lee, gold is rising substantially. So, since market people watch markets, Lee, has the Fed argument totally baffled everybody?
Yeah, because we know the Fed doesn't have any real design other than to debase the currency so that we can pay back this large debt over time with very cheap devalued dollars. See, the thing is, when you saw, Larry, first of all, yesterday you were right when you wrote in your column that we already have inflation. So putting out $1 trillion isn't going to make a big difference. But on Tuesday, right after the Fed announcement, what you saw was the market went straight up and then it faded. Why aren't we at 1,200 on the S&P? I'll tell you why. The VIX, the fear gauge, big money players are telling you, they're signaling you in the market that A, they're not complacent, B, they don't really believe that we're out of the woods, and C, they're willing to pay a high price to insure their portfolios. Ask anybody who has to buy commodities or specifically copper, and they will tell you it doesn't matter if it's speculators or it's real growth. You either have real growth or you have speculators really not wanting to hold dollars.
If I can,
I think that's what people need to realize.
If I can interrupt for a quick second, I would ask Lee Munson then, if the Fed is doing all this to commodities and driving all this inflation, what would you have the Fed do right now?
Well, first of all, I think the Fed needs to worry I don't think the Fed is trying to drive up the price of the commodities. I think the Fed, what they should really be doing is not printing so much money, but I think they need to be guiding our government towards a policy of pro-growth and tighter fiscal policy.
So the Fed should be, I just want to be clear, the Fed should not be easing further. They should be telling the government what to do.
I think the Fed should not be easing further because I don't think they're doing anything but debasing the currency.
Dan,
okay. Why are speculators buying raw materials instead of investing?
Dan, one thought I have, we've got to get out. We'll come back on the other side. Fed could stand there and do nothing. Shut up and just defend the stable dollar. I mean, how about that? Instead of a hyperactive, fine-tuning Fed day by day, they're more Keynesian than fiscal policy, for God's sakes.
Larry, just sit on your hands.
I agree, Larry.
Sit on your hands.
Right.
That's a great thing for the Fed to do. Do nothing. Government does too much in this country. Gentlemen, stay right with us. Much more on the September stall, which really has just been the last couple of days. All right, we go right back to our experts for a lightning round investment strategy. Dan Greenhouse, Lee Munson, and James Glassman. James Glassman, you first. Lightning round, favorite investment pick?
Favorite investment, blue chip stocks that pay nice dividends. Dividends, we are in a very unusual situation where companies like Procter & Gamble, ExxonMobil, you name it, Merck, fine companies are paying dividend yields that are substantially greater than the yield on the 10-year Treasury bond. This is a terrific time to be buying those kinds of stocks.
All right, let's hope that Uncle Sam doesn't slam the dividend tax rate up to 40% or higher. That's the other thing. Lee Munson, lightning round.
I do not think that's going to happen, Larry.
Yeah, well, we had a couple Democrats on that agree with you, so that's progress. Lee Munson, lightning round, favorite investment pick.
You know, I like things like Conoco that pay a dividend, but I don't think that you should sell yourself short. I think you should look at some things that have cyclical earnings, things like Bank of America, things like Intel. Larry, it takes courage to be a pig. And right now, going too defensive, I think it could kill you right now. The biggest lie on Wall Street is that only bulls and bears survive. We're going to hold our stocks, blue chip or growth, again, until we see about 1160 on the S&P. Then I'm selling you stock.
Right. 1160 on the S&P. Not that much room. 1124 today. Dan Greenhouse, favorite investment pick.
Well, you know, with respect to our clients, I don't really talk about, 1120 to 1160, but in the medium term, as long as there's this global race to debase a given economy's currency, you have to stay in the gold play. As crowded as the trade might be, to quote a phrase.
Dan, you're talking my language. Dan, you're talking my language.
I wish I wasn't, but unfortunately, that's the order of the day.
And our pal Peter Bookvar, your colleague, you're talking our language.
And Peter Bookvar has been long gold and touting gold to our customers since 2000.
Well, listen, he's a smart guy. You're a smart guy. You're all smart guys. I think, Fed wants to destroy the dollar. Fine, buy gold. That's going to happen. Anyway, gentlemen, you are terrific. Dan, Lee, and James, we appreciate it very much.